Hey guys, in today's video, I just wanted to go over some general market trends and some top stocks that I'm looking at buying right now. I just have the chart up here, the Dow 30. It looks like the Dow 30 had a little bit of a pullback today of about 0.75%. It's on a general uptrend here. You can look at the 20 moving average here. We're definitely trading over that whole pattern here. We're definitely looking at coming up to recent highs. You can see we had a high of about 29,000 here, and right now we're about 28,714. So I definitely expect a little bit of a pullback if we get up to that level here, only because there really hasn't been that much talk with the stimulus action, the stimulus plans. They really haven't came up with a solution yet to all that. The vaccine news has kind of been phased out. So I definitely think we're due for a pullback here in the general Dow stocks. I know we had a buy-in, like a general run-up here and a pullback in tech with some of the money going from tech into the Dow 30. But we also had a pullback in Apple, which kind of made this happen here, this 0.75% pullback. The S&P, we'll look at the S&P chart here. The S&P is definitely holding strong. If you look at the monthly chart here, we're definitely on a shooting star pattern, is what they call in the monthly chart. So it definitely has a lot of strength to it. I definitely see this going up, at least testing the recent highs of about 35.83. If we don't see a stimulus package, I don't know if that'll happen. I would definitely try to keep some money in cash just to try to buy in on some pullbacks. We're definitely trading over the 20 moving average here, so we're in the safe zone. Around this price range here would have been your point to buy in. Probably about this point right about here would be an excellent time to buy into the S&P. You can see that we've been trying to test this level here now twice, the 35.51 level, and we've been rejected both times. So with having a recent high with an overall record high of about 35.81, 35.82, I'd say if we get a bump up to about the 35.60 level, I would definitely be taking profits there, at least some profits if we don't see any kind of stimulus package. Looking at the Russell 2000, the Russell 2000 has also been very strong. This is about the only sector in the whole market that has been an underperformer. It hasn't even reached the previous highs of about 1696, 1698. So I definitely think the Russell 2000 has some room to grow, but we're looking at the Russell 2000 stocks as being the reopening plays. So definitely want to see some stimulus happening there to help these companies come back, the small caps. But these have had a decent run up here soon, so expect a pullback soon. I think the support level that we have here is about the 1591 level, as you can see here from the previous tops that this has made. So this has broken through those previous tops. So we definitely saw some major strength here as soon as we broke out of these levels. This could definitely trend all the way down to the 1591 level, which would only be about a 1%, 1 to 1.5% pullback from where it is now. But again, like I mentioned for the Dow, for the S&P, if we don't see some kind of stimulus package or some positive vaccine news, I could definitely see some pullbacks in the overall market. So I'm definitely looking at pulling some profits here, building up a reserve on cash, and just looking at getting in once we get some decent levels. But I definitely don't want to be out of the market because we definitely don't know what's going to happen at this point. And we also don't want to short the market as well because, as the Feds are definitely back in this market. There's a lot of debt that is definitely fueling this whole market, so I would not be betting against that. So the triple Qs, the Russell or the tech stocks, those have been about flat. Those finish about the flat day to day. We're definitely looking at definitely had a decent run here and had an uptrend since the end of September. We definitely had a comeback here. So I was definitely getting worried with it hitting the 260 level on the triple Qs. And it's definitely had a nice run up. We're almost back to the recent highs of about 303. So I would definitely be looking at taking some profits here on tech. If you're looking at staying long term in tech, of course, I I recommend the Apple, the Amazon plays, because I think during the holiday season here, there'll be a lot of internet shopping on those sites and people buying products off of Amazon. So looking at the 10-year I definitely use as a gauge of how of money flowing back and forth, cash flowing back and forth in the market. So as you can see today, we had about a 6.4% move into cash. So that's quite a big single day move, which kind of caused the pull back here. I think the market was waiting from something from the Senate and didn't hear anything. So we could see more pullbacks coming later in the week. But right now we're just kind of trending in this chopping on the sideways pattern, as you can see here for the past couple weeks here. So looking at some stocks today, we saw a decent move in Apple, negative 2.65% in Apple. Yesterday, I believe we had a run up to about $125 a share prior to the Apple event. So that was one of those buy the rumor and sell the news types of things. I myself have definitely taken half profits on the Apple that I've bought. I'm averaging in at about $105, $106 a share, so I definitely took profits on half the holdings that I have. On the other half, I'm probably just going to ride, and I'll definitely be adding to my position at about the level of strength here, which is about $110 a share, $112 a share. If it ends up dipping further back down to 104 or 100 a share, I'll definitely be buying that up. I see nothing but strength for Apple coming up here in the next year to 5 years, only because I think Apple's on a super cycle with their cell phones. With the 5G rolling out, I think there have been a lot of people over the past couple of years that have been waiting to buy a new phone, just kind of waiting till the 5G ends up coming out. So I definitely think we might not see that in the third quarter, especially with phones just coming out now. So it definitely won't make the earnings for the October 29th earnings call, but I definitely see strength coming around the fourth quarter, first, second quarter of the following year. So my plan is to buy on dips, to keep adding on dips, maybe sell a position. Try not to keep it too much in my overall portfolio. Again, guys, with single stocks, the general rule is about 5 to 7% of being your overall holdings in a portfolio. So I definitely try to keep it at that level. If it goes above that, I try to rebalance, maybe go into some other names or definitely an ETF part of the market where it's a little bit safer. Next, we'll look at Amazon. Amazon has definitely had a run here. I picked up some about the 29.90, the 3,000 range, and I sold half my positions the other day. And I should have held on. Today it had a decent gain this morning of about 0.75%. As you can see here on the 1 hour chart, you'll see that it definitely had a spike up today at this point. This was around, I'd say about 10:30 in the morning, 11:30, so it definitely had a decent run up. And then you'll see it kind of pull back to settle here at about 34.44. So I definitely think Amazon could have some room to run, especially with the holiday season coming up here, people doing Black Friday shopping. Things like that, the holiday shopping, things they need in the wintertime. I think with all that's going on right now, I believe people won't be out driving around the malls shopping. They'll basically be on the internet buying stuff from the Walmarts, the Amazons, the Target stores. So I definitely see an upside of this. I believe there was a price target from an analyst that raised this up to 36.50 a share, which I definitely think it can hit that in the short term. But overall, I mean, we're almost at record highs here of about 35.54, 35.50. So I would definitely be looking at taking some profits here just on a pullback, especially if we don't see any new stimulus news to boost the market. I don't know if many of you guys are invested in the Workhorse stock. This has been a very tricky one to invest in. They've been waiting for the U.S. Postal Service deal. I believe a lot of investors are only in for that deal, and as soon as they get that, it's basically a highly day traded stock. So you're definitely taking a huge risk. I believe you're taking a gamble, about a 30% gamble on this stock. I only mentioned 30%, 33% because they basically have a 30% chance, 30 to 35% chance of winning the U.S. Postal Service bid. I think the chances are a lot higher only because the company's narrowed down to the bid. There's actually three left, and Workhorse is one of them. The third company that's in the bid is not based in the United States. I believe it's a Turkish-based one, and right now the United States is having trouble with Turkey, I believe with buying Russian weapons and things like that. So I don't think that they'll get the winning bid on it. So I think it's probably a 30 to 35% chance with a little bit higher Workhorse winning the bid. But I definitely think it's definitely you're taking a gamble here because it's a highly day traded stock. As you can see here, the history of this, I've basically bought and traded this thing many times. I think about the $16 level, the $17 level, this thing is worth buying and maybe holding on at the end of the year. The contract news has been postponed till the end of the year. So we don't know around the December timeframe if they will. Now, that all hinges on what the government is willing to spend as well. If the government, in any case, they have any cuts in the post office, or if there's not an increase in the EV-powered cars that they want to look at buying, the delivery trucks, then we might definitely see a decent sized fall in this, especially if they don't win the bid. I think at this range here, the $17 range, this is definitely a purchase, a strong purchase at this price point. But as you can see here, I mean, the stock was trading at about the $3 level before news was coming out that this company was maybe going to get a U.S. Postal Service bid. So the ride up was all the way up to about the $21 range, $22 range. And as you can see here, it tested this level here. And it tested this level a couple times here and over here. So around that range, around the $20 range, is, I believe, the next point of resistance for the stock. So I could see this thing falling all the way back down to about the $20 level, maybe staying there for a little bit. 17 would be about the point where I'd be buying in again and hold until the December timeframe. But again, there's a huge gamble here with the stock. I think, if they win the bid, it can definitely have some upside. If they lose the bid, it can definitely sell off in the aftermarket when you don't even have a chance to even sell your shares. So I would go into this with a little bit of money. If they end up winning the bid at that point, you could definitely invest more. But at this point, I would only invest a very small amount of your portfolio into that stock. Also, I wanted to touch in on Aphria, some of the marijuana trades. So the cannabis sector has been very hot recently. I think with the Democrats maybe having a chance of winning in office. So Aphria, if you can see here, they have their earnings call. I believe it's on the 15th. So what we saw happen last time, a huge run up on the earnings call news. The earnings came out, and even though the earnings were good, the outlook that they had was poor. So you saw this massive sharp drop in Aphria post earnings call, and you could almost see the same thing happening here again, almost like a record play. So I would say if you own shares in Aphria, I would probably take half as profits, and the other half you could let ride through the earnings call. They could get positive earnings. This thing could shoot up another 20-30%. I've seen that happen in the past with this stock, and I've seen it shoot up after the earnings call, as you can see here, and then a massive sell-off. So the stock is highly traded. Your better bet would probably be to play the MJ, the ETF on cannabis. This has been a decent trade, and I think it's a safer bet. Plus, it also pays a dividend. Every quarter it pays a dividend, so it's not too bad. You'll see here when the Aphria fell about 4.2%, MJ fell about 2%. So you get the whole cannabis play. So you get some of the cannabis growth stocks, the Aphria, without taking the massive risk of holding one of them. So those are my top 5 trades. Like I said, Apple, Amazon, Workhorse, Aphria, the MJ ones. Those are the trades I'm looking at in the short term here. I'm also playing the precious metals as well, so I'm also hedging my bet with some of the GDX trades, which is the gold miner ETF. So I also like to invest in GLD and SLV, but I love GDX a little bit more because you get uh, a stronger turn if we get an uptrend in gold. And with all the money borrowing, I could easily see the US dollar, which is the DXY. I could easily see that falling, and gold having a nice run up. Especially if we do get any kind of stimulus package or like a triple P funding to the businesses. I could see more spending, more debt, which would only lower the value of the US dollar and thus increasing gold. So I definitely like GDX here. I try to pick it up whenever it dips. Today it dipped down to about 39 bucks a share. As you can see here on the daily chart, let's look at the 1 hour. On the 1 hour chart, you'll see it dipped right here. It went all the way down to about 39.45. I picked up some more there. So this I'll definitely hold at least through the next 6-7 months, maybe even longer. It definitely pays a dividend too, so that's not too bad. You get a dividend on holding your money. Let's go back here to the 1 day chart. The last time it paid a dividend, it paid about 19 cents a share. So like at least you're getting something holding this versus holding physical gold, which you're definitely taking a risk of holding it in your house and protecting it, and also the cost of having to sell it, having to buy it, paying taxes, things like that. So I definitely like the gold miners, the traded fund also. So if you like the video, guys, please give me a like, comment, and please click the subscribe button. It definitely helps, guys. All right, thanks. Bye bye.